Yes, ma'am. Okay, I'll give you 5 seconds. Hello, everybody. Welcome to Lunch and Learn. This is the Women's Month special. I don't know why we do a Women's Month special, because technically every month in the club is Women's Month, but I suppose it's like weird Women's Month, which is always fun. Today we have got Cebi, who will introduce herself. Let me not even introduce her, but she's been a clubber. She's been a fast tracker. She is currently a clubber. We love Cebi, and so this whole month we're going to be having different women that we love and appreciate, and we want to show you guys the kind of women that are in the club, because we always get people that are like, I have this type of business, can I be in the club? I have all the time. I don't know how to say yes 15 times. So this is what this is going to be. We're just going to give you a showdown of the kinds of women that are in the club, but also so that you can learn from them, because this is what Lunch and Learn is about, right? So Lunch and Learn, if you are new here and you've never attended Lunch and Learn, this is our 1 hour, technically 45-minute segment on Friday, where we do a learn, right? You having your lunch, hopefully right now. And the idea is that we want to teach you about your business that you can implement immediately, right? We want to do fast wins, nothing that's overly complicated, but something that you can take home, do as soon as you log off, or as soon as you wake up tomorrow, or on Monday morning, just so that you are better equipped to deal with business and etc. We know that there's this thing that business is lonely and entrepreneurship is isolated. We're trying to create a community around that, and that's what this is about. If you are not already part of the club, this is what we do here. We have a beautiful platform called the Club She Is platform, where you can sign up as a member. You can be a premium member like Cebi is, or you can just hang around and be a free member. But in order to access a lot of the training and materials, you'll have to upgrade. The upgrade for premium membership is 349 Rand per month, which is an absolute steal. And I'll tell you right now, it's a steal. I know Cebi's like, you guys need to increase your prices, because what we do is not worth 349 Rand per month, but we do it because we want you guys to not have any excuses. So we will be sharing details about that later on, and you will be getting our newsletter today as soon as this email ends, so that you can sign up and join the community. Just be a part of women who are changing lives. And today, actually, I don't know if she's here, Tato messaged me, and then she says, oh no, she's doing this certification. She's a life coach. She's doing this certification. But she can't be part of the club because she's not qualified yet. We're like, she's like, I don't have a website. I don't have a social media. I'm like, so where are you going to learn these things? Who's supposed to teach you? In the club. Literally, that's what we do, right? We're teaching you how to sell, how to show up online. But that's it for now. For me, hello, everybody. I'm going to give over to Cebi. But while you guys are here, please can you just drop in the comments what kind of businesses you have, what you do. So if Cebi wants to reference and give examples that you can use in your own business, in your own lives, then she can use real tangible examples and not just make things up. It's always very, very helpful. Hetty is a photography. Permanent marriage. Sama is legal services. Cebi, are you still here? You just disappeared. Oh, that's hilarious. I don't know what Cebi is. Okay, but give me more.
She's back.
Okay. She's back. Okay. I'm going to pin you. You've got a few examples. Momso is a network marketing. It's always helpful with network marketing to tell us what kind of products you sell. Because the idea is that you sell products, right? So it's like Avon or Tupperware, or I don't know what other stuff that people sell in the thing. But give it up for Cebi.
Yay, thank you. Nyaki, is my screen visible? Okay. I assume yes. I'm using one screen, but I will work with what I have. So
wait, Tony, sorry, before you start, I wanted to say something. Guys, before Tony starts, we are the church of Club She Is. We love hallelujahs, hell yes, girl, keep going, right? It encourages you on the other side because you're not talking into a void, because it's very intimidating to speak to people that are not responding back. So we want to see emojis popping up. If she's saying something, if she's saying something that you hate, just boo, get off the stage. But she won't. But please do encourage and keep it going. Okay, Cebi, over to you.
Okay, thank you so much, Nyaki. Thank you so much, Kopano, Club She Is, everyone, for coming through this afternoon. We are doing this tax thing. So today we are talking about let's make SARS tax season work for you and your business. So there is this old saying, actually it's from the Bible, that says, give Caesar what belongs to Caesar. Back then, the SARS used to be Caesar in the Bible times. Now in South Africa, we've got SARS, and we just need to give SARS what belongs to SARS. But of course, there are ways to make sure that you're not giving SARS more than what you're supposed to be, and we're going to be looking at that right now. So you might be wondering, who is this and what's in it for you? Because maybe someone shared a link for you and be like, hey, Tommy, you must please listen up. I am Cebi, as previously introduced. I'm a chartered accountant here in South Africa. I've got more than 15 years of experience in the accounting and tax industry, and for about 5 years, I worked with SARS as an auditor, auditing the tax returns that the individuals submit and the business owners, and I was also working on the debt management side as in responsible to collect all those monies that people owe. So if I might have called you or like taken money out of a bank account, I'm sorry, I was just doing my job. But now I'm on the other side. Now I'm on the other side. The founder of Kindness to the Accountants, which is my accounting firm, and I get to work with fabulous people like you, business owners, employees, freelancers, professionals, and all of that. And today we are going to be looking at how we can legally reduce SARS tax debt for the business and for you as an individual in your personal income tax return, and how to increase chances of a refund, how to leverage SARS concessions to your and your business advantage, because there are ways that you can use SARS, the law, to make sure it works for your advantage. Just a little disclaimer, this is an information sharing session. We are here to learn and to learn. This is not a tax opinion. Okay, let's dive straight to it. I hope you guys are excited as I am, because we are at the peak of tax season in South Africa, where we are submitting our personal income tax returns. And today we are going to be looking specifically at income tax. Of course, there are a number of taxes that we have here in South Africa, that pays you in and all of that. But specifically for this purpose, we're going to be looking at income tax because it affects mostly us as business owners and for our businesses. And then, speaking of the income tax, SARS only cares about the income, the money that you are getting. Wherever you are getting that money, SARS wants to know that you are going to be taxed on it, which is, according to SARS, this is very important for us to talk about it. According to SARS, an income is a total amount, whether it's in cash or otherwise. For example, you are a coach and you get a graphic designer to do your website and your marketing and all of that. You guys trade. You say, oh, okay, I'm gonna coach you on this, and then you're gonna do my website. The equivalent value of the website or of the coach, that is an income to you, and SARS wants to tax that at market value. So total amount in cash or otherwise, received or accrued, whether you have received it in the bank account or you have invoiced, someone is owing you, SARS wants to tax that money, or it is received in favor of you. Maybe your employee needed some money, and then you asked the customer to pay the employee instead of giving the money in a bank account, that money is taxed to you as the business owner or as an employee, whichever side you are. And when we're talking about a person, we're talking about either a company, an individual, a trust, and all of that. Let me know if I'm moving too fast. I've got a lot to get through, and I want us to finish everything before we are done with our lunch. So there are two important terminologies that we can play around with SARS. One is called tax evasion, which is this is an illegal way to run away from tax. Literally, you hide your money under your mattress, you do cash transactions instead of like SARS wanting them to know about those things, or you just literally not declaring any money to SARS. That's tax evasion. And tax avoidance is the legal way of making sure that you are paying as little tax as possible, or even getting a refund from SARS. And today we're going to be looking at tax avoidance, which is the legal stuff. We're doing legal here. So how do we legally reduce our SARS tax debt for us as individual taxpayers and for our businesses? So there are two tax returns that you need to submit as a business owner. It is for you as an individual, which is the ones that we're busy with now up until 20th of October, and for your business, which that one is based on the financial year end of your business. So as a business owner, which means the individual, there are a number of allowable deductions and rebates that you can use. I've only selected very few. So there's retirement contribution that I've like picked specifically because you can claim up to like 27.5% of your retirement contributions, limited to 350,000 per year from SARS if you are contributing towards a retirement annuity, a pension, or a provident fund here in South Africa. That's a big amount that you're gonna be deducting on your taxes. At the same time, you are saving that amount for your future retirement. Then there's medical tax credits and medical expenses. If you belong in any medical aid in South Africa, you are eligible to get some tax credits for every month that you contribute to your medical aid. And if you do not, either you've got a medical aid or you don't have a medical aid, for all your medical expenses that you pay for in cash out of your pocket, you are allowed to claim those expenses as a deduction when you're submitting your personal income tax return, including the ones for your dependents. For example, if you've got a child or a parent that is dependent on you, all of those expenses, they are allowed to be claimed in your tax return. Donations are to registered public benefit organization, an act of kindness when you are donating to an NPO, NGO in your neighborhood, or these big South African registered PBOs, you are able to claim that donation or the value of donation in your tax return, but you just need to make sure that you have gotten a Section 18A donation certificate from the person that you've donated to. Travel expenses, when you are traveling to your clients or for business and all of that, or for not for the purposes of your work, those travel expenses are deductible. Home office expenses, this is a big one since COVID because most people, they work from home, required by their employer. In this case, a portion of a rent, rates, cleaning services for your home, the portion which is the equivalent of your home of the office space that you occupy and you use regularly for your work, you are allowed to claim that pro rata, that portion of those expenses in your tax return. Of course, your office must be fully set up. At home, you must not be working in a lounge or in the kids' playroom, having your desk in there. It must be a room that is fully set up for you to work as an office. And capital gains, this one, when you are selling an asset in South Africa, of course, there are exclusions. You get to be charged capital gains or liable to pay capital gains if you make a profit out of that asset, whether you're selling your house, equipment, or anything like that. But for individuals, there is 40,000 annual exclusion, as in if you make a profit of 60,000, you're allowed to reduce that profit by 40,000, and then you only pay tax on the equivalent of 20,000. 2 million rands for primary resident. If you sell your home where you regularly stay, you on the gain that you have made when you were selling that home, as in again, the amount that you used the price for minus the amount that you paid for the house and any other costs that are involved. You make a profit. If you made a profit of less than 2 million rand, you are not paying tax. I think this one I picked specifically for capital gains because it's kind of like fresh in my desk. You know, I've got a real two-story example on this one. So this is my client. I was submitting their tax return for 2025 2 days ago, and then immediately, okay, they sold a property. They were renting out this property. It was not a primary residence. They were not staying there. It was not their home. They were renting out, and they sold that property for 1.3 million. And SARS saw that money coming into the bank account of 1.3 million. However, because it is a rental property, it is a capital asset to this taxpayer. And then, therefore, there is capital gains tax. So when we were submitting this tax return, we calculated capital gains as in the profit, the real profit that this taxpayer made. It was 1.3 million, the amount that they sold it for, and then minus the 850,000 that they paid to buy the assets, and then they made a profit of like just below 500,000. And of course, taking into account all the exclusions and everything that goes to SARS, this taxpayer was only allowed to pay tax 10,000 rands in total, taking everything. And then immediately when we submitted this return, SARS picked it up for verification. SARS, they use bots like us, they use systems like us. They just like when you're submitting a return gets through the system where it filters any things that are not normal than usual. And SARS has got all the information that we have. SARS knows how much money do you owe, to who, anything that is like literally out there. SARS knows how much do you have in the bank account. So this letter came 2 minutes after we submitted the return. I've highlighted yellow here. SARS is saying that, thank you for submitting your tax return. We have evidence of income in your bank accounts that was not declared in the tax return. Please explain why this was not declared as a salary or income. As in the 1.3 million that the client received when they were selling the house, SARS is saying, bring that 1.3 million. It's supposed to be here as an income. However, on our side, we calculated capital gains tax because we know that this is capital gains. However, SARS says that 1.3 million is still sitting in the bank account and you are doing nothing about it. You know, so we had to submit that information to SARS, everything, including the transfer deeds, documents, as in when the house was bought 13 years ago, to show that this house was bought for 850,000. This is the profit. This is everything, and we had to submit that this week, as we await for SARS to do the verification and let us know what they say. But what I'm trying to say is we cannot run away from SARS because SARS has got eyes everywhere. And now, continuing as a business owner, as in the individual, how you can structure your salary or your investments. So salary in South Africa, the salary that you earn, it is taxed at a marginal tax rate of between 18 and 47%. However, dividends is taxed at 20%. So if you are self-employed, as you're running your own business and you're paying yourself a salary, these are the things that you can look out for? Like, should you rather be paying yourself dividends, which is taxed at 20%, or should you rather be paying yourself a salary, which is taxed at different or rather high percentages, depending on where are you sitting on the SARS scale. Tax-free savings account, this was introduced a few years ago, where all the interest that you receive from these savings account, it is not taxed. Rather than putting your money in the fixed deposit account, that's where the interest that you're going to be earning is going to be taxed. There are some measures or some accounts that you can use, like this TFSA. Endowment policies, again, this one is taxed at a flat 30%. So instead of putting your money into a fixed term deposit account over 5 years, and the tax is gonna be taxed at that marginal rate, which up to 47%. It is sometimes better to use one of these policies, at least to know that you've got a flat rate. And then trusts, they used to be popular back then because the tax rates were quite smaller, but now trusts are taxed at 45% as compared to individuals of 47% at the worst. So it's just to like have a look at what works for you and all of that. Now we jump into the business. How can one legally reduce the SARS debt for the business by using the allowable deduction and the rebate again? So this slide, I know it looks quite hectic because there's a lot that one can play around with to reduce their SARS debt on their business. Firstly, structuring your business is very important, as in whether you register your business as a PTY, like let's say PC, private company, or you're trading as a sole trader, because sole trader is a business on its own, or you are just doing a side hustle where you are all the monies and everything is coming to your name, and you do not have a business that you are trading under. So a sole trader and like an individual, whether it's a side hustle or whatever that you are selling or services that you provide under your own name, any profits that you're making in there, they are taxed at that marginal scale rate of 18% to 47%, whereas a company, whether it's a PTY, LTD, or Inc. Incorporated, that one is taxed at a flat 27%. The other thing is to deduct all the business expenses that are allowed. So as a business owner, the stock, the rent, entertainment, marketing, accounting fees, all the business expenses that you have incurred, travel, those you are allowed to claim them, including the startup costs. For example, if you create some websites or get someone to register a company for you, even before it's got a name, you start incurring those costs. Those costs you are allowed to deduct them to reduce your profits as the business is trading. When I picked up entertainment specifically, it's called entertainment according to the tax world. However, when you are maybe having a meeting with a client, you go to Magazine for a cup of coffee and all of that to discuss whatever business deal, those expenses of you being there, like your tea, coffee and stuff, it's considered entertainment because you are trying to entertain the client and to get business. You are allowed to claim all of those expenses. Not for your lunch, it must be for you and while you are there for business. And it's not for your family dinner. The other thing, again, for businesses, there's a lot, but I've picked up only like few. There's something called learnership allowance. So if you employ people that are classified as learners, this is like, if they're called learners according to the SETA, the Sector Education and Training. There are a number of sectors, of course, in South Africa, like in the food industry, in the tech, and all of that. So if you employ in your business learners, and you are going to equip them, give them a skill that's going to help them in that specific industry, you are allowed to claim something that is called learnership allowance, which is 40,000 per employee each year, up to 60,000. So if an employee that you have employed as a learner is a person with disability, that amount gets to 60,000. However, it's 40,000 depending on the NQF level, or 20,000 if it's the higher NQF levels. And also, this is a good one because it also contributes to your BEE status level, because you are seen as empowering the learners into a specific skill. And then similar to that, there's one that is called employment tax incentive. So when you hire or you employ a youth, a person between the age 18 and 29, and they are earning a monthly salary, you're paying them a monthly salary of less than 7,500 rand, you get incentives every month for that. There's a scale, there's a ratio of how that gets to be done. But you get an incentive from SARS. Literally, SARS pays you back for employing a youth, because in South Africa, we have got an issue of unemployed youth rate, which is high. The next one, small business corporation. This one, whether you are registered as a PTY or an Inc. and all of that, as long as you are a business that is registered, you can, when you are doing your tax return, or you can apply to SARS to be classified as a small business corporation. Of course, there are limits of what it means to be a business, a small business corporation, in terms of like the amount of earnings or revenue that you have. And the tax rate there, it's a scale between 0 and 27%. Literally, you can pay no money to SARS, or you can pay like 7% and all of that, depending on the profits that you've made. And the next one, it is depreciation on capital allowance. So the business expenses that we mentioned there on top, it does not include an asset. When you're buying a car, when you're buying a computer, when you're buying a building and all of that, SARS doesn't give you a deduction upfront on that. However, for your capital assets, you are allowed to claim some allowance every year, for as long as you are using the asset, your laptops and your podcast equipment, your farm equipment, and all of that. Lastly, on this side, it's turnover tax. It's called it's for micro businesses. This one, it replaces all the taxes. So if you've got a turnover or an income of less than 1 million or less, you can apply to be classified as a micro business, and instead of paying the VAT, the income tax, the dividends tax, the provisional tax, you just pay one tax, which is called turnover tax. And then now, what are they? Are we still good though? I want to see your screen. I think you're good. Thumbs up.
Still good, baby. Keep going.
Thank you. And then there are proactive ways that you can just plan ahead to make sure that you are getting all you can from SARS for your business and for you as a business owner. Firstly, provisional tax. This one, we don't take advantage of it as we're supposed to be. Provisional tax literally means that you make an estimate that in a year, as in at the end of the year, how much profit you would have made and how much tax you would have made, and only pay half of that upfront. So, for example, now provisional tax season, it is due, or rather, for 2026 financial year. We have to make as business owners, for our businesses, or anyone who earns an income where they don't have pay as you earn deducted. So if you are a freelancer, you are a YouTuber and all of that, there's no tax that is being deducted on your income, then you qualify as a provisional taxpayer, which means that you just need to make an estimate that at the end of the year, as in next year, how much tax are you gonna be liable to pay? And then just pay half of that, literally, which is you paying to SARS in advance, so that next year when it's time for you to submit the tax return, your tax burden has reduced. This is applicable for both to a business owner, where there's no tax that is deducted every month on the income that they're earning, and for the business, because business doesn't pay as you earn. And then the next thing is using bookkeeping and accounting. This one, I know we normally run away from it as business owners, like, oh, it's a cost. Oh, do I need to do this and all of that? But it's just the same as when you want to lose weight, you have to do some physical workouts. You can't just be sitting down the whole day, whole night and all of that. At the same time, you need to look at the nutrition. So same here, when you're talking about SARS taxes, you can't talk about taxes without talking about bookkeeping and accounting. So it is important that your income and expenses are kept regularly, accurately recorded. You can use any system. You can use an Excel, you can use an app, you can use anything, but I always advise business owners, don't just get an accounting software if you don't even know how to use it, or you won't even be using it fully. Rather use an Excel to record your expenses every day, every week, or every month. And then it's very important we separate business expenses and personal expenses, because we use those business accounts to swipe for our personal things, and then when SARS is auditing, then it's just a mess. SARS is questioning everything because it's not clear what was business related, what was personal related, and all of that. And it is a law that you keep all your documents for the things that you have submitted in your tax return, whether it's an income or an expense, for a period of 5 years. That is SARS law. I call it SARS law, but literally it's tax law. And we know that those pill slips, they fade away within 3 days while they are sitting in your handbag. You lose them and all of that. If possible, do them, save them electronically, whether you scan them using your phone, you use a cloud-based system to store them and all of that. That's very important that you do it. And remember, bookkeeping and accounting, it is a running cost for business. If you do not have capacity to do it yourself, or it's just like causes a headache, get someone to do it for you. You pay them, you claim that amount from SARS. Now, the most fun part, the exciting, everyone looks forward to this one. How do we increase chances of us having a refund as business owners and for our businesses? First thing first, refund is only applicable if you have paid, if the employer has deducted more tax than necessary and paid it over to SARS, or if one has worked for less than a full year and the employer deducted pay as you earn for the full year, or the provisional tax that we spoke about earlier, if you have paid to SARS more than what you need to pay at the end of the year, or if the allowable deductions or the expenses that you were looking at and more, they are more than your income, then you're going to be on the negative side, which means you are likely to get a refund. And SARS does not pay any refunds that are less than 100 rands. Like administratively, it is a cost. So that refund, it gets to be rolled over to the next year and the next year up until you've got a refund of more than 100 rands. And then how do you actually increase chances of you getting a refund? Is to claim all the legit expenses, only the legit expenses, not the school fees for kids, because SARS is gonna disallow those things. And to submit the tax return early, the earlier you submit, the better, because you still have chance to correct any mistakes that you might have made, than waiting up until the last day or the last month for you to submit the return early. Like you're making mistakes, of course, because it's like already late. There's this thing that SARS introduced about 3-4 years ago called auto assessment, which is we all get excited about. But it is important that we use that very wisely, because auto assessment means that SARS has taken all the information that they have out there from the third parties, which is either the banks, the insurance providers, the medical aid, and all of that, both the income and expenses, and the employer as well. And SARS was like, okay, let me save you some time, taxpayer. I will do the return on your behalf, and then I will issue the assessment. And most people, they get refund out of those auto assessments. And of course, you get excited, you've got a refund. However, it is important that you go and check that everything that you're supposed to be deducting is there. SARS does not know that you are working from home, and therefore you've got like some rent equivalent of the home office, some cleaning and rates and everything that you want to claim. SARS doesn't know that while you went to the optometrist, they couldn't pay all your glasses and you had to pay 5,000 more. And you can claim that as a medical expense, So it's important that you take some time, review that auto assessment, make the changes and submit. Of course, you might be audited, but if you've got all these records, all these documents, it's more changing for you. And verify your banking details. This is something that has been common, especially this tax filing season, where SARS just, even if you didn't change your banking details in the tax return, SARS just requires you to go and verify that your bank details are correct, because there's been so much fraud around people hijacking people's taxpayers' profiles and changing the banking details. And then now, there are SARS measures or concessions that us as business owners and for our businesses we can use. And if you have submitted a tax return already and you hear me talking about auto assessments and you've like already accepted whatever that you needed to accept, there's still a chance to go and correct. Or if you've submitted your return and you realize now, you should have claimed the medical expenses, you should have claimed travel or whatever, there's still a way to correct that. So I've got my personal favorites out of those SARS measures or tax relief. So the first one is remission of penalties or interest. So if you've got any non-compliant with SARS, either you do not submit your tax return, or you don't submit it on time, or you don't pay on time, SARS charges penalties and interest. And you are allowed to request SARS to remit, as in to write off those penalties and interest, and give SARS a reason why were you non-compliant. If your reason is valid enough, then SARS will write off those penalties. And they can accumulate like very quickly. So for example, if you've got tax returns that you haven't submitted, for each month, you get to be charged a penalty of between 250,000 to 16,000 each month for each tax return that is outstanding. So if you've got tax returns that are outstanding from 2019, we can say 2019 and then every month times the number of those tax returns, and SARS calculates the penalty depending on how much they're saying that you might have supposed to pay us tax of this much. So you can request SARS to write off those, and you can do this on everything actually that is here. It can be done either at the branch or on e-filing. And then the next thing, installment payment arrangements. So if you are owing SARS a lot of money, you're unable to pay it and all of that, you can make an tolo with SARS. You just pay SARS maybe over 3 months, over 6 months, 12 months, or whatever. You can do this application also on SARS e-filing. Request for correction. So if you've submitted a tax return and you've realized, oopsie, you made a mistake, then you can still go to your tax return and go revise it, that's called request for correction, and have another version. And from there, SARS is gonna use that updated version. Request for reasons. When sometimes SARS will submit a tax return on your, the assessment that SARS issues. For example, in the case that I've showed, SARS might have gone and be like, this 1.3 million was supposed to be taxed at 47% and all of that. And then us as taxpayers, either for us as business owners or for our businesses, we've got a right to request SARS and be like, hey, SARS, what do you mean? Why? How? And all of that. And then objection. Now you're objecting on whatever that SARS has done that you feel like it is incorrect. So you submit to SARS and be like, SARS, you're not supposed to be taxing me on this amount because it's actually a capital gain. You submit the proof to SARS, but SARS has got this thing that is called pay now and argue later, which leads us to the next part that says objection suspension payment. This objection, it can be like quite a long or lengthy process because SARS need to first review that what they said it is true, now it is not true, and all of that. But at the same time, SARS has got a rule, or rather the law, the tax law says, pay SARS now and argue later. So you are allowed to request SARS to suspend the payment that they need from you while they are dealing with the objection. The appeal, basically, if SARS comes back and still saying that, hey, you're owing some tax here, then you can still appeal on that objection. Voluntary disclosure program. This one, if you have had non-compliant with SARS and you are now coming clean to SARS, basically it's like going to SAPS and be like, hey, I've sinned. I'm just like here saying, okay, what can we do? Because I've made a mistake and I've got non-compliance that cost this much and all of that. So basically you have an agreement, you talk to SARS, you go voluntarily to SARS and be like, okay, this was a mistake, it was supposed to be like this and all of that, and then you have a discussion on SARS. The last one, this one is also my personal favorite, is debt compromise. So it's where SARS either writes off all the debts that you are owing or reduces it. You just have to prove to SARS that you or your business is having financial difficulty. For example, if you're owing SARS some money and you've got some employees, and if SARS takes that money, then it will mean that you will have to close your business and then loss of employment and all of that. You can submit a request to SARS to write off or reduce the debt that you are owing. Because sometimes some people, they owe like millions and millions, where even the installment payment arrangement will just never help, you know. Okay, I think we're doing well. We are getting to the end of it now. So I think we might have guessed already that it costs to be non-compliant with SARS, and we cannot run away from SARS. Wherever we are, SARS can find us. As long as we are still alive, SARS wants money. And of course, there are financial implications, as we have said, that there are penalties and interest, there are legal risks. I think we have seen like some people on the news, on TV, covering themselves with newspapers because they've defrauded SARS. And as a director of a company, the company that you own, you are personally and legally liable for anything that is happening to the business. You might have seen or might not have seen, if you are using your own, you don't have an accountant and you are logging into your SARS e-filing by yourself, you might have seen that SARS has now merged your personal tax profile with all the companies that you own, because you and the company are kind of like the same person. And SARS wants to track, for example, if you're saying that you're paying yourself a salary from the company and you're making that deduction, however, on your personal tax return, there's no salary that you are declaring that you are earning, then that can be easily matched and be like, oh, what's happening here? There's a salary that is coming out of kindness to the director, but there's no amount that is going out, which of course, penalties and all of that, and also just business viability and reputation. You know, there's just so many issues that can happen when one is non-compliant with SARS. For example, the bank accounts get to be frozen. If one is in a tendering business, you can't get tax clearance certificate to even get more business. And some government departments or the government entities, even before they pay the invoice, they want to see that you are tax compliant. So you can't be paid if your taxes are not in order. Of course, the good news is there is a way out, which is it is to work with SARS. We have seen all the reliefs, all the measures that we can use to work with SARS. And it is like self-learning, self-development as well. That is why we are here every Friday. We take an hour to learn on new things that we're not aware of. We're teaching ourselves on technology, on sales, marketing, and personal branding and all of that. Also, same thing has to apply when it comes to taxes and our accounting. And this one I cannot overemphasize it. Like, even if you've got an accountant, please know your numbers. Please know what's happening when. Just a little bit. Just a little bit. It is your responsibility because it is your money. It is your business. Yes, money, tax, and everything like that, it causes you headache, but at least have a brief understanding that how are you doing with your finances? How are you doing with SARS? When is what due? Just a little bit, so that even when your accountant is no longer around, at least you know how to move over to the next person because you know how far you are. And this one, we always say, I don't want anything to do with SARS and all of that. I think it's the same. Like, we all didn't want anything to do with social media, but now people can easily go live any day, anytime, because we have practiced it. And to use reputable and qualified accountants, there's like millions of accountants out there, but not all accountants are familiar or will do the job. Some will leave you hanging, some will work with you up until the end. Again, cost versus benefit. Sometimes it is not even necessary for you to have an accountant. You can do all these things yourself, depending on your business. As in, do you have time to do this? Do you have a little bit of knowledge for you to do this by yourself? And also, is it beneficial for you to do it, or it's beneficial to get someone to do it for you? Because sometimes as a business owner, all you have to think about is your clients, you getting more clients, building your business and all of that. Then you can hand over that to someone else instead of spending 20 hours a week, punching in your bank statements and all of that. Then you can get someone to do it for you. You can hire an intern. You can use one of the options that we have seen here, hire a youth person, and you even get some incentive from SARS for that. But make sure that whoever that you are using, if you're not doing it yourself, they are qualified. And that is the end of me. Question is, where do you find me if you are looking to speak to me? Instagram, email address, Instagram, kainos.co.ca.inc, email, Facebook, and I've got a 10-minute free consultation just in case you just not sure of something that we've discussed here, or maybe you want to know where you're standing with your taxes and all of that. And I've got this offer that is amazing. In this period of like us submitting our tax returns, I've got it done for you tax return for individuals, which costs only 850,000. No, not thousand.
Wow, Cebi.
I mean, accountant, guys. I'm not used to small figures like this. And this is really a limited offer because we try to take very few clients so that we can focus on them and be like very efficient in doing their work and all of that. I will drop 2 links here in the chat box, one for the free 10-minute consultation and one for this tax return. Us doing the tax return for you, and we take care of the audit and everything, but 850, of course, excludes doing financial statements for you or any schedules that you were supposed to do during the year and you've never done that. That is me. I would like to hear if there are any ahas, any ooh, and all of that. Thank you.
We want to hear ahas. If you guys can just you don't have to switch your cameras off on because I know some of you guys are super shy. I don't know why. But let us know. Who was that? Someone said something.
It was just a laugh.
It was just a laugh.
Yeah.
How did you find the session?
It was so nice. I'm in the accounting industry, so some of the things I just found out on the session. So yeah, that was so informative, especially the part of reducing your returns. Love that.
I'm one of
Thank
those
you
people
so
that I
much.
absolutely hate SARS. Go for it.
Thank you so much.
Kitty.
Cebi, I just need you to drop in your link in the chat because, girl, you got me hooked. So I just needed to have that free session with you because, man, I realized that I'm sitting on money. So please expect my contact soon.
Thank you.
Beautiful.
Everything is on the chat. Thank you.
Madupi?
Hi. Thank you so much for the session. Sorry, I sound a little weird because I've got the flu. But thank you so much for the session. I just had a question, if that's okay. I don't know if we've got time. Okay. What does SARS, you talked about the program where they might remit penalties. What do they consider legitimate reasons for remitting penalties?
Okay, so it can be mostly it's like when you were not aware that you are in a bracket where you qualify to pay tax. You thought, because there are some instances where you rather to submit the return. There are some instances where you're not required to submit a tax return. For example, if you're earning below 500,000 and the employer has been deducting some money and that and that and that, and you don't have any other income, then in that case, you're not required to submit a tax return. Okay. Because the employer has already deducted. But you might not be aware that actually you are
crossed over by adding this income or something else. Okay.
Yes. Okay. So mostly it's like around awareness, and you have to tell SARS exactly what have you done now, or what are you going to do now to make sure that you're not compliant again.
Okay. All right. Thank you.
Thank you.
We got time for one more question. Go, Dudu.
Hi, Cebi. Thank you for such an informative presentation. I have a question on if you're employed and your employer never withheld pay from your earnings, but you worked for like less than a year, less than a financial year, let's say from September until February, then what happens then? Where do you start with that process?
Were you employed like on a temp basis, or were you
full-time
service provider? Full-time.
Yeah.
Oh, okay. So on your payslip, you don't see pay as you earn.
I didn't have a payslip. I'm not laughing. I didn't have a payslip. Yeah.
Oh, okay. So it is the employer's responsibility to make sure that they deduct and pay over that salary, that payee. However, there are instances where if you are below the threshold, the employer is not necessarily obliged to deduct tax, because anyway, for example, as a threshold now, things like around 90,000 or something. So if annually you're going to be earning less than that, and then it is like rather just a cost for the employer to be deducting that money, paying it over to SARS, and you to submit the return, get a refund and all of that. So if you are below a certain threshold, then you're not required to. So we would just like need to look in detail at your case, that what is it, was the employer's fault and all of that. But yes, you can still submit the tax return as a good citizen, and just if you do know how much was your income and all of that, declare to SARS. But of course, SARS is going to want a proof. The reason the employer is required to deduct payee, it's because when they are every now and then they're required to submit something called MP501 to SARS, where they're saying that out of our employees for this year, this is how much we've deducted, and they basically, that's an IRP5. IRP5, it gets to be attached to a tax return, and then when you are going to SARS to check, or SARS e-filing, your IRP5 is already there, which is whatever the employer is saying that they deducted or they paid to you, it's already there. So it might be tricky if you don't even have a proof or payslip, unless you do know exactly how much are you earning, how much you're supposed to be earning, and all of that. But
right,
you can get to the 10 minutes free thing, and then we talk about it.
Cool.
All righty. Done. This was good. This was good. Good. Yes. Okay. So awesome. Thank you, Cebi. We really appreciate your taking the time. It was very informative. Some of us are in big trouble. We've been running away from SARS for a long time. but maybe one day we'll sort out our lives. I don't know. Okay, so guys, book your consultations, but don't book just for like what to ask a question. Book with the intention to buy, right? Because you are trying to book so that you can get your taxes in order. Don't book and then just be like, okay, nice to know, and then run away from SARS, because we don't want to do that. We want to stay compliant. So really appreciate that, Cebi. And then next week we are continuing our lunch and learn as we do every Friday. If you are wanting to join us next week, this whole month, we're going to be having different women. I know we're going to be having Zama, who's a lawyer. We're going to have Palisa, who is a public speaking coach. And then we're going to be having Pumza for Black Tax, and Pumza is next week. So if your business money is being taken away because of the Black Tax constraints that you have in your family, and we're going to be speaking and listening to a Black Tax coach who's going to walk us through how you can have tough conversations about money, especially to the people that kind of need the money in your life. So that's what we're going to be doing next week. And then again, the replay is available for club members or premium members. So if you are a premium member inside the community, you will get this replay so you can revisit it at any time. And if you do want to become a premium member, join the community and then upgrade from inside. If you want to join us next week, same thing is going to be happening. Just get the free app, get the community, be in there. You'll see all the links to join, but you will also be getting an email on how to join as well. Appreciate you guys. See you next week. Goodbye.
Thank you. Bye.
Bye. Thank you.